Hello, everybody. We're back. It's Truth or Skepticism. It's another beautiful Wednesday, July 19th. Mr. Radigan in the house, all dressed up. I like this. And
I'm going to give you my summer best here. I'm going to give you this.
Are you in the Hamptons or something? You're all matching.
Zoom background is a Zoom background, so that's not to be discussed. But I'm giving you my summer. My summer's July. Happy summer, sir.
This is like a blue. This is casual, Dylan. I like it.
Season's greetings.
Yeah. I mean, where are you now?
I'm just in Lake Placid. I'm in Lake Placid for the month. I'm in Lake Placid for the month.
Nice.
It is actually sensational. It's quite summery. It's a mountain summer anyway. This is not for a discussion of weather, but it's been lovely. Certainly, we're no longer discussing the floods. I'll say that much.
Yes, that's the good thing. I was actually in Maine last weekend, and it was beautiful to be, in rainy Maine.
Well, just with the heat wave being what it is and all the things, I've been more appreciative of the mountain summer this year than years past.
Well, you're lucky you haven't been in Rome.
Or any, you heard of the polar vortex, of course, from the winters.
Yeah.
I have friends who are there now who I've been chit-chatting with this and that. They have the African vortex.
Yeah.
And it's the hot air from the North African desert blows north in the summer. It was hotter in Sardinia or Sicily, probably Sicily, than Dubai.
Yeah, I read it was 115 degrees Fahrenheit. I've never heard of that before. 115 degrees in Rome and in Sicily. And during the day, 114, 115. I've never heard of that. Insane.
That's the African vortex. That's the opposite of the polar vortex.
Yeah.
I've been enjoying the water skiing because it's been nice. I've at least for the swim. I've been fortunate to be in the cooler climate. So, but anyway, it's been difficult to entertain myself because I don't know if you've heard. There's a really big strike out in Hollywood, and we can talk about many things, but really, what it comes. I just want to. Can I just read you something that I read recently?
Sure.
It says. They show no understanding of art or any knowledge of how to respect artists. Completely shameful. This is what streamers and studios want to do with SAG actors. This is but one example of the sickening AI push. This form of AI is theft, robbery, unconscionable, disgraceful.
Yeah.
Just posted just recently in America by a man named Alec Baldwin, who's outspoken. He's not he's an extremist, but still he's a Class A actor. And then also a bunch of the actors. And again, this is not as a referendum on the author. I'm just making the point.
No, I understand.
Is front and center. Like we could talk about, what about the spring shows?
I read Sarah Silverman's piece.
I'm not so much interested in the Hollywood, no Hollywood, whatever. Although I think it might be good for the social media companies. People just might not come back. They're like, TikTok it is. Why do I care? But I do think it's an interesting sort of public battle on AI versus the man. It's like the first public Paul Bunyan versus the machine. Because they want a contract that says even if you make a movie with no actors, because you have robots and this and this and this, you still have to pay for 20 actors, even if no one works. I mean, I don't know what the negotiation is, but I'm sure there's some live actor clause for AI protections.
Yeah, I find it all interesting. I'm not sure where I stand on it. I mean,
that's why I bring it up, right? Even myself, because if you're Bob Iger and you're like, listen, entertainment is a business.
Yeah.
And I can produce with an animated film and AI voices and AI writers compelling content that it entertains, especially the big audiences, the action audience, the children's audience, and then I'll save the Quentin Tarantinos and the Woody Allens and the Wes Andersons and the writers for the grown-ups, and those will be real people, and those will be nice movies. It'll be a world. but the guts of it's going to be AI voices and madness with heroes and children's adventures. What can I tell you?
I find it. I find that entertainment, by definition, is. I think by definition, I think that's how you say it. Is very closely tied to personalities, and AI to me does not have any personality. I mean, it can imitate, but it's still an imitation.
But that's why I'm giving you your Woody Allen.
I understand that you are, but it also, you know, the wonderful thing about entertainment is that also includes all the people that you've never heard of before that become a star. You know, I mean, you make assumptions when you talk about, you know, the Woody Allens and whatever. I mean, these guys are 80. You know, like, you know, De Niro and Pacino and whatever else. I mean, you know, what about the 20-year-olds that you never would have heard of before? You know, so there's there's an element to it that's so personality driven that I don't believe AI can replace. I mean, sure, listen, we can have AI come into Tasty, and I'm sure we can create, you know, somebody that can just something that can just tell you as much about the market.
With this one that I bought, they have an actual picture from the Dali Museum of Salvador Dali. The person is, if we take Tom Sosnoff, okay?
Yeah, sure.
Animated Tom saying whatever AI says it thinks Tom would say.
Right.
But it's not even an animation. It's like, really, it would be Tom and Tony using archival video and AI and voice recognition. That's why Alec Baldwin's going crazy bananas with the unconscionable.
I know, but if you've ever listened to that stuff, you're like, oh my God, this is so bad.
No, I get it, but but Hollywood's point is it's a matter of time. Sure, granted, it's bad right now.
Yeah,
but we're doing a new deal. You've swapped to streaming, and eventually this thing's not going to be so bad, and it's going to be 3-5 years from now, and you're going to be like, maybe.
Yeah, listen, I mean, and again, I'm someone that believes it's very difficult to turn away from new technologies, and I'm not saying that it's right. You know, like, I don't want AI stealing my jokes, and I don't want AI playing me.
You're a talent. In addition to a businessman, you are a talent.
And my jokes are way too good, you know, to be AI'd out. But the other side to it is, I think that ultimately there's certain aspects of this that are going to make us all so much better, and so much and make things so much better, that I don't really look at it as, you know, I mean, I understand they're all scared, and I understand, you know, there's certain aspects of it that have to be, you know, controlled and protected, and I get that. But
that's what the issue right now. We can all do the 60,000 square feet glory hole, you know, techno utopia run, and surely it's right over time, and surely positive drift. But we've never seen we haven't seen technology come up against people like this in a long time. In such a public way. Technology and people are both complementary and adverse all the time. Mm-hmm. But because it's Hollywood, and because it's summer, it's just an opportunity, I think, for everybody to reflect. I bet you nobody really knows the answer, because Bob Iger has his argument, and the actors have their argument. But are you going to end up paying actors that don't work just out of a contract? It's weird. You know, I don't know. Or is it illegal to use AI, Tom, unless Tom gives his consent?
Well, I guess we'll see. It sounds like it should be, but who knows?
Well, in the trading sense, I would think it seems like it has been at least good for the perceptions of the streamers themselves, because no new content, blah, blah, blah. Netflix, little bump. And the other thing is, I wonder to the degree to which, if it went on for a while, you'd actually would see a migration to the social media channels, TikTok, Instagram, and all that jazz, in a way that people, you know, that they actually have this can create a permanent declination in the audience size, as I'm sure they all know.
I actually think that AI in the financial world is going to be a huge benefit to everybody. So I think that the difference is very different than in the entertainment world. In the edutainment world, which is where I live, and in the financial service space, it's going to be a huge plus. So, like, some industries, like, you know, like entertainment, traditional Hollywood style entertainment. Yeah, I mean, I can understand they have concerns. Maybe some of them are real, some of them are exaggerated. But in the financial service space and in the financial edutainment space, AI is going to be absolutely a huge plus. It is going to allow people to access investor education for basically zero, which is huge, because right now it doesn't exist and it's too expensive, and it's all run by snake oil salesmen and scammers and everything. So investor education is basically going to be commoditized down to zero. Access to information is going to be instantaneous. The biggest challenge in the world of finance is nuanced know-how. Like what does a tick mean in here, and what does this, and all of that stuff essentially disappears overnight with AI, because every single person and platform has access to an unlimited amount of information at a click. And so you can basically ask any question you want. So essentially, and as far as instantaneous support and everything else, I think the world of finance changes dramatically for the better. And this also accelerates the transition from passive to active. So I think that in our world, because I can't worry about everybody else's world, I got to worry about my world. And in our world, this helps, short term, medium term, long term. I think there's benefits for everybody, and it doesn't give. All it will do with markets is provide additional efficiency to make markets even tighter, but it still will have no impact on what a market's going to do. So it's going to make everything better and more efficient. It's going to make access to information more efficient. It's going to empower customers at a level we've never seen before, and it's only going to make the markets, that much better. So I don't see how there's any negatives in the world of finance.
But on the content side, you acknowledge there's a reason they're having an argument, because it's a different value proposition. Because in the financial world, the value proposition is the assets and expertise about the assets and risk and time.
Yeah.
Whereas in the entertainment world, the assets are the people.
Yeah,
right?
If you were to complain, if you were to look at the negative side for just for us here, now a customer at some other firm is going to be able to access, our content to Tasty, and use it somewhere else. That's possible, but it also increases the size of the universe of potential players so great that I'll take my chances.
Do you think it's relevant in the short term to the Instagrams, and do you think there's a benefit to TikTok, Instagram, Netflix from disruption like this in this whatever the content business even is?
I do short form content. This just adds more of it. So if you're talking about a negative disruption, I think it's pretty positive for short form. And it's also free content. So again, you can't R about free. So I just don't see it as being a negative at all.
Other than the human story, which is a different tale for a different day.
The human story is going to become far more valuable, because the human story is going to initially get diluted, and because people are going to be confused as to what's human and what's not, and then you're going to be a verified human. So
You mean you need a robot to tell you that you're? There's some comedian has a robot to tell you that you're not a robot.
Yes, I'm going to have a check mark next to the Tasty Trade. I'm going to have a blue check mark next to the Tasty Live show. This is today performing for Tom Sosnoff will be Tom Sosnoff. Tony Batista is being played by a Dell, by some high-powered Dell server. But the role of Tom Sosnoff. You could do that
with all of us. You could do that with me. You could do that with Dr.
Sure.
Jim. You could do it with yourself.
Sure.
And then we could check the ratings.
Right. Truth or Skepticism today is being brought to you by Tom Sosnoff is playing the role of Tom Sosnoff, but Dylan Radican is being played by, we have a beautiful
Sun Microsystem server from back in the day. We'll see if we can do it.
We resurrected it from 2000.
Found one from his basement. From storage.
So I kind of think that's going to only increase the value of the live, of the live content and the real, the real
Which
stuff.
brings up my next thing. Do you think there's an AI-powered software which wouldn't exist without AI that it basically is an efficiency machine of all sorts? Like basically, to your point, whether it's jargon barriers or transaction barriers or brokers or intermediaries or whatever it is, that AI really is the next nail in the coffin of the inefficiency of point-to-point transactions, with the fantasy being, wallet to wallet across whatever with the blockchain. Is AI...
It's pretty funny, actually. I don't know.
capable? Because we have like Tasty Direct software where basically I think of anything and I would like to own a Vespa in Italy, and it's just like, okay, done, boom, 1 point. Like, we know the Vespa guy, send your wallet. Like, you're moving in that direction, it seems.
Yeah, well, the old thing. Hey, I know people.
That's the motto at Tasty Direct. We know people.
We know people. Now you don't have to know people anymore. Now you just got to have a login, have username and password. You know people.
It used to mean something to know a guy. Now you just need to remember your password.
That's right. Hey, that's okay. You know what? That, again, just think about that. Joe Blow doesn't know anybody, so he's disadvantaged. Joe Smith knows everybody, so he has this advantage. But once AI comes in, again, it's the great equalizer. It normalizes out all the harp. So then Joe Blow has no advantage over Joe Smith, and everybody's equal again.
Trading places.
Kind of. Trading places. It's you're
for the world, for the universal.
Yeah, status is eliminated. So if you eliminate status because you level the playing field, you get rid of all the inefficiencies, and you eliminate status, are more people happy or more people sad? I would say way more people are happy.
For sure, I agree with that. Would that mean that, not that you would necessarily, this was, I'm sure, not deliberately dovetailed, but it does dovetail with the affirmative action or even legacy admissions? I mean, I don't want to go into that rabbit hole. And I don't.
Yeah, it's a rabbit hole for sure. But
it goes to the destatification of modern culture.
Yeah, I don't see the. Listen, I'm somebody that believes I believe in the necessity and the importance of,
affirmative selection across. I agree with that.
We need diversification in every aspect of our life, in business and school, everything. We can't just be, one dimensional.
But I was thinking more of the targeting of the legacy stat. I wasn't thinking so much about. I wasn't trying to get lost in an affirmative action discussion.
Yeah, I don't.
I was just thinking more around the status in general as a diminished value proposition, and thinking more on legacy admission.
Anytime you eliminate status, you eliminate broad, like different forms of status. You bring so much efficiency into the marketplace that you have, that's where, when economies explode, that's when everything, when markets normalize, because there's kind of like not a redistribution of wealth, but a more equal distribution of wealth.
And there's a higher transaction rate and a higher level of trust.
Of course, whenever you have 5% of the people doing, let's say 85% of the transactions, that's not a good thing. When you have 20%, like, this is not a huge, I'm not suggesting that we need 100% of the people to do, or 80% of the people to do 80% of the transactions. But when you go from 5% of the people doing 85% of the business to 20% of the people doing 85% of the business, you have a system that is infinitely more efficient, cheaper. The effectiveness of how everything works.
I don't think anybody disagrees with that. I think it's
you can't.
Just like the transition from one temperature to another, the same way that, sure, I can go from hot to cold or cold to hot or wet to dry or dry to wet, but it's in the transition period that there's a stress. Tornadoes form, things freeze and expand and explode, and all those things. And so I just think it's a question of. I was talking to a friend of mine just about the AI thing in general, who's a CEO of a Italian technology company, but he's in his 50s, very smart, very competent, but not 20. And he's like, they had a board meeting. They're like, we need to make a conscious decision about how we're going to relate to AI. Like, are we going to try to keep up with the leading edge of AI as a bunch of 50-year-old tech, advanced manufacturing, or are we going to try to source someone else? Anyway, I think it's a strategic decision for every person, and certainly enterprise.
Yeah. And then the other thing, like in the world of finance, when you're in a highly regulated business, everybody's sitting around wondering, well, if I let AI respond to this, if I use an AI response,
to customer responses,
and I'm not actually writing the response myself or reading it, how much liability do I have, and who's going to sue who, all this kind of crazy stuff.
Anybody called the directors and officers of the insurance company to ask them who's responsible for a bad AI if you go down with the SEC?
I don't even want to know. I mean,
that's the final decider, because that's who's going to pay. We got to call the insurance CEOs up and be like, listen, will you issue a D&O against SOC?
The funny thing is the SEC
uses AI to answer.
The SEC or FINRA doesn't want me to answer a customer, but do they mind if AI answers a customer? Like, it's so ridiculous. But then the customer can go there. The customer can go there directly. So there's just so many different things. It's funny.
When the customer go to ChatGPT or whatever and be like, pretend you're Tom Sosnoff. If you ask Tom Sosnoff what his opinion is of whether or not I should buy Tesla after the bell today when they report earnings, what would Tom Sosnoff say? That would be so interesting. We should do like a test where we do AI like that, and then we actually do it with you separately, and maybe it's the same answer. That would be incredible.
No, it wouldn't. Just freak everybody out. I don't want to know. But it would be funny. How many people would Google, hey, what's Warren Buffett doing today?
Yeah, exactly? Like, pretend you're Warren Buffett.
Yeah. Tell me what Warren Buffett's. Pretend you're Warren Buffett.
What's the opinion of Tesla right now?
Yeah, it's the same thing. Tell me Elon Musk's next great idea. All that kind of stuff.
Exactly. Well, but the point is, jurisdiction is destiny. There's for whatever the cultural and humor here. Yeah. And you yourself are a man, you like to gripe about it. Your one gripe is you are a man who lives in a jurisdiction, a heavily administrated one, in fact, of the American financial services system. No one more in the crosshairs of the jurisdictional dispute than the crypto boys and girls, who in the United States anyway have been really, getting knocked around, although the stock price for Coinbase would show you an indifference to the American hostilities, I would say. If anything, a ridicule of the American hostilities. But there was recently, the big loophole for playing along, I guess, is that it's not a security. Crypto is not a security. It's I think a governance token, or it's a membership in a club. It's either a social or an administrative function. It's not an economic function primarily, which has been a disputed legal posture. And it was ruled, I guess, last week or whenever recently that Ripple, or one of these currencies, XRP is the name, I think, was ruled not a security, which was viewed as a counter trend to the American sentiment of anti-cryptoism. So I guess a couple of things. Do you think is it a mixed bag of administrative views here at the top? Or like, is Gensler not the single voice on crypto in this country? Do these judges matter?
Well, I mean, so far these judges matter. I think it was I think the court decision, the New York State court decision, was a really good wake-up call. I think they threw water in Gensler's face. I think that it was applauded throughout the world of finance by both sides of the aisle. I don't think there was anybody in either party, any firm in the whole world of finance where they weren't like, hey, good for you. I mean, it is very hard to stand up and do what, spend the money. How many people have $100+ million to blow, fighting that case? Just think about the numbers. It's just extraordinary. And I mean, Ripple spent,
I would call it prohibitive.
Yeah, prohibitive. Okay. And I mean, that's crazy, but they did it. And I watched a TikTok video with the CEO of Ripple, and he's really articulate, reminding me of the CEO of Coinbase. And he basically said, it didn't matter how much it cost, as long as we had the money, we were going to fight this because it's just wrong. And he goes, they're wrong. And, and this was the right thing to do. And a lot of companies would have just, tucked tucked and rolled.
Roll it over,
Yeah.
find a rock and stick it in the
Yeah,
rock.
yeah. And and listen, if we were in the same situation, we couldn't have afforded to put $100 million behind that case. It's not our primary business. I mean, it doesn't, we would have felt strongly that we were being held at blackmail, but
It'd be a shareholder revolt for your $100 million legal boondoggle.
yeah. Considering we don't even trade Ripple. But thank God they did. And thank God the judge saw through it. And of course there'll be an appeal, but the decision was really valuable because it showed that the SEC can lose a case and they can be vulnerable. It also showed that they were wrong. It threw water on their whole kind of game plan. I'm sure it pissed them off, but good. And I think it was a really important message, to the integrity of product development and technology in the financial space. And it was a nice slap at the SEC. It was a good thing.
The SEC rulemaking through enforcement has been one of the criticisms of the SEC in general. Like, instead of making the rules, they pick up these odd cases and run these budgets and everybody's time. Like, do you share that critique? Or is this an example of that even?
No, we share that critique. In fact, what the SEC does, it's kind of really sad. They go after, the smallest firms and the weakest links, the injured baby, the injured, animal.
Undercapitalized.
Yeah, right. Or not even undercapitalized. Like, sometimes they'll come after us. Like, we're not undercapitalized and we're just smaller than, Schwab has 7 trillion or whatever, 2 trillion in customer assets. We have, a few billion. So it's harder for us to fight against the SEC than at least Schwab could take a stand or something. And I guess, they'll come after firms that they feel don't have the capital to fight back, because you really need a few, 25, 50, $100 million of extra money lying around to fight, the regulators, specifically the SEC, on anything. And if you don't feel like wasting that money, because I'm not sure what you gain from winning, you pretty much can't fight.
Find a way to settle and pay.
And then they have precedent. Then they just say to the next firm,
they got their little rule.
They got their rule. Right. It's ridiculous. It's ridiculous.
The way to negate the rule is to drop $100 million in 10 years of your life in some misery.
Now, you remember one of the things I said a couple of weeks ago? I said I felt that the blockchains needed to step up because I felt that, this was unfair. This was an unfair case to let the individual brokerage firms like Tasty or Robinhood or Interactive Brokers or anybody else that supports digital assets, to let Fidelity even has, I think, Bitcoin, to let the individual brokerage firms have to fight the battle for the blockchains when we barely make any money at all on it. It's really a convenience for our customers, or do it as for convenience, for PR, whatever it is. But the
marketing, convenience, and future possibilities.
Exactly. And these big blockchains that make, gazillions of dollars, they just said, oh, this is not a problem. We're not, we're above, all this crap. We just built the technology. And at least Ripple stepped up, which is why, I'm really happy with what they did. At least they stepped up and said, no, we'll take on the fight. But the other
trigger.
Yeah, they did. But Solana, Cardano, the other, the other blockchains
rolled over. They rolled over.
Well, they just decided to avoid the fight, and it's wrong. They can't throw it on the rest of us. We're the ones that are fighting for the customers, and they need to step up their game.
Why is it the right decision? Why is a token not a security, and what makes a security?
Well, I don't know. We could argue that for a long time, but in my opinion,
you said it's the right decision. You said it's the right decision.
It's the right decision because it's a piece of technology. To me, it is not really that much different from a blockchain with their own proprietary technology. To me, is not that much different from a corporation with their own technology. And when I look at a blockchain technology company and that trades under a certain digital asset or cryptocurrency, and I look at a listed, company that builds their own kind of technology, I don't see much difference. Like, I'm colorblind to that relationship. And to me, if people are willing to trade it and there's a market for it, then I'm good with it.
But is it the global regulator's job there's a fine line between a technology that provides a payment service or a record keeping service or a title transfer service, or like there's all these technical functions that are theoretically hyper optimized, which we've been through. But then there is blue sky, the Great Depression, used to be the Dust Bowl.
Yeah, and
the giant sucking sound of trillions of dollars of productive capital into a worthless hellhole.
Well, is it that, or is it that just that everybody wants to get paid? You see, because there are spot markets right now. Remember, this is a spot market, so the argument was not over leverage. I can understand if there was a leverage argument in this, and I can understand the case for no leverage because it's not a listed, security or whatever. But I don't understand the argument against trading it for buying it or selling it for cash, because it's, why is it any different than the spot FX market or the spot gold market?
But what's the difference between a governance token and a security?
Well, I'm not sure. What do you mean by that? I'm not sure where we're trying to go.
The argument they make against the SEC is they say, no, this is a membership. I'm part of the Tasty Trade crew. I've got, I have whatever. I've got access to the party in London or Chicago or whatever the heck they're doing. Or it could be more mundane than that. It could be, I have access to the platform to use the platform for some way or whatever. That's interpreted as that the token's value is derived from the rights and authorities that it grants you by owning it, not by its dollar value. Whereas a dollar bill is not valued based on its rights and authorities, but on its theoretical intrinsic value, or a euro, et cetera, et cetera. And a security is the same thing, where it's currency first and then, asset underlying or associated value second. Yeah. So, as opposed.
Yeah, I would make the argument there that that's a dangerous path to take. I feel like it is, because you're basically trying to make a fundamental argument, and there are a lot of companies out there that trade at astronomical valuations with negative cash flows and huge losses and no profitability.
You should see these biotech companies that I was ginning around with this spring in Boston.
Yeah.
Those have no huge bills, no money, they're just playing for a scientific outcome. It's
exactly.
And thing I've ever seen.
And how's that different from what Amazon did when they were, they were almost $1 trillion company before they had a profit? I mean, how's that different from Tesla?
I concur.
So I don't understand how Tesla technology is different than blockchain technology in the way that if I'm an investor, I don't think this was a governance thing. I think this all comes down to, hey, we want to get paid, and the exchanges, the regulatory bodies.
Well, this was a shakedown.
Yeah, it's a shakedown.
Straight shake. And Gary Gensler's the bad cop in the shakedown.
Well, the world of decentralization, and again, Gary Gensler is going to make a strong argument, and there are arguments out there that because it's early stages, there's an incredible amount of fraud, and all he needs to do is see an FTX Binance situation, or Bittrex, or one of those other Mount
never ends. It's boneyards.
Mount Gox, everything else. There's an argument to be made for, hey, this is why we have regulators. This is why we have exchanges. I get it. But again, the other side of the argument, it's all in its infancy. And there's lots of things that we've all done that are also, I bought oil and gas wells in Texas that didn't exist. I've bought gold.
It's not about what you're not, it's about, do you know what you're buying? It's fine for you to buy anything you want. It's your money, your party.
Of course. I'm just saying.
But do you know what you're buying? And you are led to believe that this is a secure asset, but it's an insecure asset, or if you're led to believe that this is an oil well, but it turns out to be some crazy guy's idea of a toast cafe that only serves toast, but you thought you invested in an oil well. It's the deception that that I think Gary Gensler would be concerned with. With the definition of fraud.
Yeah. So, yeah, listen, I'm not suggesting for a second that any of this stuff is easy or any of us can figure it out right away or anything. But the idea that we're going to pick one or two or three blockchains and out of thousands, listen, I'm a free market guy. I look at it from our side. I have a much more, I think, real argument than the SEC has. We run a brokerage firm. We, do not want our customers to put their money in stuff where they might not get their money back because it gets
bad marketing. Bad marketing.
What's in it for us if we give an access to a product to a Tasty customer and there's fraud involved?
It's a black hole. It's a financial black hole.
Why is there anything? There's nothing in that for us. The second thing is, what's in it for us to take? We're not a firm that collects assets. So we're a firm that has customers deposit money with us so they can trade with it. What's in it for us if it's a non-leveraged product that customers don't trade? Because you can't go short it. And so basically they just buy and hold.
There's nothing to drive transaction frequency. If anything, it's negative. It's a slows transaction frequency.
There's no transaction revenue in digital assets for us whatsoever. I mean, there was for some other firms for a short period of time, but it died instantly. There's no transaction. So there's nothing, there's no compelling, we're not doing it because we make any money on it, or because, there's a lot of risk.
It was Tom Brady. Tom Brady didn't know.
I understand.
Maybe you're just ignorant. Maybe you're just excited.
I don't think it's ignorance either. There's a lot of risk for us. But the flip side of it is that we are facilitators of opportunity. I talk about this all the time. It's our job to build really cool technology and to create really cool content. It's not our job to play God with respect to what Dylan Ratigan can or can't trade, or can or can't use strategically, or what Dylan Ratigan can or can't have access to.
Although AI should be able to figure that out. You should be able to say, what would Dylan Ratigan like to trade and what would he like to have access to? And AI should tell you.
Well, that's a whole different question for AI.
Same episode.
But from the way we look at Tasty is, I don't want to tell you what you can do. I don't want to tell you what strategy you can do. I like to build content that will tell you how to optimize some of your decision making so that we can help you with process and help you with mechanics. But I'm never going to say, hey, trade this or trade that, or use this strategy or that strategy, or don't trade this or don't trade that. Never. Because we are
You're endorsing something by listing it on your properties by virtue of the fact, you don't allow access to every lemonade stand and snake oil salesman in Ohio. Well, you have a filter. You're like, I'm not going to list this.
Well, that's what good companies do. That's what Amazon does. That's what.
Sure.
That's what
you have judgment. You exercise judgment. At the very least, you try to filter for obvious fraud.
Of course. That's what That's what casinos do. I mean, just talking about all the different things out there. You go to a casino, you don't want to just have to play slot machines. You want some choices. And I know you don't have good odds, but you want some choices. In Amazon, you don't want to just buy Amazon products. You don't want to go to Costco and only be offered Kirkland products. Their job is their role is to give you as many choices as possible at really good prices. That's what we do. Give you as many choices as possible at really good prices. It's the best we can do. We would not offer digital assets if the marketplace wasn't efficient. So what scared us about it was not giving access to digital assets to the Dylan Ratigans of the world. It was giving access to non-liquid products that we didn't feel you could get in and out of with a fair markup or markdown. So if the markets were too wide,
your customers are going to get face hosed trying to get out of the situation.
So we won't offer things where we don't feel there's liquidity, or where we're one of the only firms that doesn't offer OTC BB stocks. Now, the argument is you offer crypto, but you don't offer pink sheet stocks. And the reason we don't offer pink sheet stocks, access to pink sheets, is because there's simply too much fraud. We have more fraud in pink sheet OTCBB stocks by 100 times over than we ever had in crypto. So,
and what more easily accessible in traditional platforms.
Exactly. So like if you go to some platform, I'm just going to use an example. You go to a platform like E-Trade. I'm not picking on E-Trade. I promise you I'm not.
Not breaking balls. You're not breaking
not
balls.
breaking balls. But you can trade OTCBB stocks at E-Trade or Fidelity or Schwab, but you can't trade them at Tasty. But you can trade digital assets at Tasty because the markets on digital assets are way tighter and the amount of fraud is virtually non-existent. But if I go to OTCBB stocks, the amount of pump and dumps, fraud, the amount of Trojan horses on your keyboards, and the amount of like buy-sell fraud is enormous. So we don't offer it. So that's how we protect customers. Now, the SEC would say, no, you should offer OTCBB stuff, but you shouldn't offer crypto. Like, how stupid is that?
Well, the judge agreed with you for once, sir.
Yes.
It's a little
So that's why I said the judge.
Little sunshine for you on a rainy day.
That's why I said the judge made the right decision.
I noticed you answered the question quite efficiently and with great passion and gusto. Now, one of the many things that you offered up here was a refusal to tell anybody. Well, you gave a lot of things you won't do and all the things you will do. You gave us quite a bit there. But with that said, what would you do with Tesla after the bell today?
Okay.
I couldn't help myself. It was a setup. You're like, I won't tell anybody what to do.
You could have asked ChatGPT what I would do, and they would have told you because.
Let's ask.
I did talk about it this morning, but I do not like the fact that Tesla has an implied move today of only $20, which is less than 10% of the current stock price. And I feel like it is not enough of an expected move to justify the risk in Tesla. So I have a very wide strangle, which I probably will make even wider on the close because I don't like it. But I have put a position on. I'm short the NASDAQ. So I sold NASDAQ, which has not worked. It's a giant loser at this point.
We know.
I'm short the NASDAQ, but I'm not trading Tesla or Netflix for earnings with anything other than just like a token trade to help pay for my $1 billion Mega Millions lottery tickets tonight.
Right. Just because you hate to be out of the action. You want to have a seat at the table, even if it's a small one.
Exactly. But I'm not playing it with any kind of real money or any significance because I think a $20 move, an expected move of $20 in Tesla or an expected move of $40 in Netflix is simply too small to play for. And I do not like the risk reward in those trades.
Alec Baldwin called it catastrophic, cataclysmic, apocalyptic. He was big words. Think about it.
Yeah, I know. He's got a much bigger vocabulary than me. I'm
a lot of big words. Very, very clear and unambiguous for him.
I'm simple folk. I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. We do this every Wednesday. And Dylan, thanks so much. Great show as always. And we will see you next Wednesday.
Understanding is we'll talk next week at some point, indeed, as we always do. Take care, sir.
Thank you.